Trading with the price action is not that complicated. Price action trading strategies can be used by both newbies and professionals. And traders love price action for its undistorted view of the market, as Japanese candlesticks reflect price action itself. Another advantage is that PA signals do not repaint in the chart over time. So, to succeed in trading price action, you don't have to study all existing price action patterns. 3 or 4 patterns will be enough if traded them regularly. So price action strategies work best in long time frames like weekly, daily or 4-hour ones. A shorter time frame will generate more signals, but they will be less profitable. So to trade price action, one should have own trading rules and basic principles that determine trading behavior at any particular moment. The second essential thing is the support and resistance levels. The price action strategy generates entry signals, but it doesn't provide exit signals. So you can exit trades at a strong support and resistance level. The key levels enforce the price action patterns if they appear near strong levels. So to trade profitably, a trader should be able to define the trend and mark strong levels in the chart. The key levels could be not only horizontal support and resistance levels, but also the price channel, the Fibonacci retracements, bank levels, margin zones, and so on. So once a trade has mastered basic trading principles, he or she can start using price action patterns to discover the best entry signals, stop loss value, and reach the best risk to reward ratio. So is the best to work out the skills of trading with price action in the strategy tester with the virtual money. In this case, the trader will be able to practice trading patterns at the comfortable speed of the tester without the risk of losing real money. In addition, the trading simulator will allow you to consider the features of each pattern in different market states, trading flat or trending. It will also allow you to gain great experience by working in any historical segment of the market. In general, trading price action patterns comes down to the following steps. Step number 1. We need to define the current trend you are going to trade. Then, next step is mark the key support and resistance levels in the chart. Then, expect the price correction to the strong levels. Next step, monitor the chart reaction to these levels, test and expect a price action pattern in the needed direction. Next step, enter a trade according to the pattern. Next step, set a stop loss according to the pattern. Next step is set a take profit according to the basic principles of your trading system. Appropriate options are the take profit in 2 or 3 times bigger than the stop loss, the nearest support level and resistance levels, and add the border of the price channel and so on. So you can guess the idea. So we are looking for the risk-reward ratio, strong levels, so on and so forth. Anything that suits you best. So now we will discuss the trading strategies with price action, the basic ones. So the PA is a trading method that should be used in combination with other trading strategies, as always, that will give a clue where in the chart one should look for a pattern and in what direction to enter a trade. So many traders use price action in conjunction with the simple horizontal support and resistance levels, as well as moving average indicators to determine the trend. Other popular combinations to trade with the price action are the Fibonacci levels and the price channels, VSA analysis, margin zones, option levels, indicators, oscillators, and so on. So the price action method is good because it can be combined with almost any strategy and any time frame. So you can use a price action for both positional, medium-term trading and scalping as well. And some traders combine fundamental analysis with price action by highlighting significant news and waiting for a pattern to form as the news is released. Okay, now I will cover several popular price action strategies. So, can I combine scalping and price action? Yes, definitely. So using price action, you can spot profitable trade entries with a good reward and risk. So of course, you should learn scalping basics to trade with this strategy successfully, and you need to remember that scalping suggests trading in short time frames from 5 minutes to even 1 minute, holding trades for a short time and closing with a small profit. So that is why a scalper should be flexible and easily adjust to the changing market conditions and shift from buying to selling quickly. So to trade a price action scalping, you should firstly define support and resistance level, no price action setups, and of course these are the two main key things that you need to remember and know, because this strategy mainly employs the trend continuation patterns. Since the price moves in the shorter time frame usually occur within the trend in the longer time frame, so it is more profitable to trade in the trend direction than to open positions on the trade reversals. So I recommend the M5 time frame. To trade in the M1 time frame, a trader needs more experience and skills. Furthermore, the minute time frame features much more price noise and suggests entering numerous trades in a short time, which add psychological stress, which not everybody can handle, especially in the beginning. So the 5-minute time frame provides time to think over and plan trades. You could apply all the price action patterns covered in previous videos and in this one as well, but they should be traded at the levels marked in the 5-minute time frame. So let us discuss now the chart layout. So let us take the Euro-USD chart as an example, of course. First, we marked key levels based on the most recent price moves. So the last 2 hours will be suitable for analysis to discover important levels. To mark the levels, you should consider the price highs and lows, followed by a reversal. So horizontal levels are drawn along with these highs and lows. However, a level is not a particular price value. It is rather a zone in the chart. So you should consider both the candlestick shadows and closing prices. Look at the strong support and resistance levels in the 5-minute Euro-USD chart. As you see, a level can be both a support and resistance. If the resistance is broken by the price upside, it becomes a support. In the previous chart, I drew key levels for the local Euro-USD uptrend. Next, we need to search a pattern. You should look for a price action patterns only when a strong level is broken out and the price is corrected. Look for an entry signal on the correction after the retest of the broken out level. So now let us have a look at an example. In this chart, the first pin bar has formed after the price broke out level of 104441 to the upside and corrected back to this level. So the pattern is reliable, so it can be traded. The second pin bar appears below the support level of 104572. This pattern cannot be traded, as the candlestick closes below the level. So the price breaks out the level, but it can't consolidate below and goes back to the broken out level. After that, on the right side of the chart, the price again tests the level of 104572 and breaks it out with consolidation. So level 104572 again becomes a resistance, from which the PPR pattern forms, which is the rightmost part of the chart. And so such a pattern can be traded. Okay, so now as for the trade entry, here are the general rules to enter a trade in the price action scalping strategy. First, enter a trade when a price action occurs at a strong level. Then stop loss is set beyond the strong level and the size is 3 to 5 pips. In some cases, a stop loss could be 10 pips. And the stop loss size depends on the asset volatility. If the price chart is moving sharply, then the moves are quick and long. The stop loss should be bigger. If the price is moving rather smoothly, set a standard stop loss of 3 to 5 pips. Then take profit should be about 3 times bigger than the stop loss. Differently put, the reward risk ratio is 3 to 1. So the trade is exited when either a stop loss or a take profit. If the price is not going in the needed direction, immediately is not a reason to exit a trade manually. So now let's discuss the examples of the trades entered at the levels we discovered in the previous section. So number 1, the first pin bar suggested an entry level of 100,429. The stop loss is 104,399 and the take profit is 104,519. So the trade yield 9 pips with a potential loss of 3 pips. Second pin bar is not taken into account. The third pattern, PPR, provides an entry level of 104,507 and a stop loss is at 104,593. So the exit price is at 104,247. As a result, the trade yielded 26 pips with a potential risk of 8.6 pips. In this case, it took some time for the trade to work out. The price do not always go in the needed direction right away. And in this situation, one should always observe the rule that the trade is exited either with a stop loss or a take profit. So this is very important. Do not trade it on break even and any stuff like that. Furthermore, the PPR pattern formed in a wide range, which also takes the pattern some time to work out. And as for important notes to remember, when trading the price action scalping strategy, a stop loss is set not according to the pattern rules, but beyond the support or resistance level. So the price could move up or down before it starts trending in the needed direction. It should be borne in mind that the M5 timeframe refers to short timeframes with a lot of market noise. It often happens that as a result of this noise, the price forms several different price action patterns near the level, sometimes touching it, sometimes going beyond it. So if you put a stop loss with some margin per level, you can avoid its false signals. So you should remember that you should use sufficient lot size to enter a trade in scalping, as the main target is to make a profit of a few pips and exit the trade. Therefore, scalpers use high leverage. And in this case, along with the potential profit, the potential risk also increases. That is why it is essential to set a stop loss and do not move it. Okay, that will be all, guys, for today. More videos about price action are on the way, so remember to subscribe to the channel and I'll see you in the next video.